Thank you very much for coming by to take our quiz to find out how much your bad credit costs. Feel free to take the quiz as many times as you'd like to find out how changes in your credit picture can impact your financial future in the years to come. This is your credit cost report for people in the credit score range of roughly 500 to 579, which is the financially critical. So you're in a financially critical position here, kind of like critical care, where you're not dead yet. There's still some fight, but we better do something quick. Because people in this credit score range have a credit score profile that will eliminate you from all but the most expensive loan programs. Even on government loans like the FHA, they're going to require you to actually put a 10% down payment, meaning you have to bring an extra $25,000 to close on a $250,000 mortgage versus if you had better credit. You will not qualify for any government down payment assistance programs. You'll likely be adversely selected on rentals in better high demand areas. So the nicer apartments that have their choice of tenants, that have multiple applications, they're going to take people with better credit profiles. You're also going to face higher insurance premiums because many lenders are actually going to refuse to insure you. And it raises the possibility of actually missed employment opportunities, particularly in better paying, money handling jobs, as well as some government contracting positions and things like that. There is a dramatic opportunity for savings here, which we'll go through in this report. The left side of the screen here is we're going to analyze the cost savings on a home by improving your credit. So on the left side of the screen is the credit mortgage profile for somebody with excellent credit, meaning their credit score of over 740. Based off of a market survey, roughly somebody with a 740 credit score would pay about 3.25% interest on a new home loan in the $250,000 to $300,000 range. However, if your credit score is in the seriously delinquent credit category of 500 to 579, your credit score would balloon up to about 5.5%, meaning that you're actually going to pay 31% more every single month on the same house because your credit is worse. This is a savings of $106,360 to $125,520 over the course of a 20-year mortgage. This is based off of calculations off of a 30-year mortgage, but the first in your home alone, you're going to overpay by $100,000 to $125,000 on your house. Or if you are comfortable with that payment, you could actually buy way more house. So the payment based off of a 500 to 579 credit score would actually get you a $316,000 house versus a $250,000 house if you had better credit. Likewise, if you had better credit, instead of getting a $300,000 house, you'd actually be able to get a $380,000 house. This big screen swing in prices can actually radically improve the neighborhood that you're buying into. But let's look at cars as well. So let's look at a very popular used car, which is a 2018 Honda Accord EX. It sells for roughly $24,480 used. If you had excellent credit, you could actually get a loan rate of 4.34%. So that's the market rate on auto loan with excellent credit. However, if you're in the 500 to 579 range, it's financially critical because that quadruples up to 16.14%, which increases your car payment every single month 27%. So it's a 20% higher payment on a depreciating asset that's going down in value very rapidly, meaning that you are going to actually overpay by $10,460 on this car off of this $24,000 car over the 7-year loan versus somebody that has excellent credit. If you like trucks better, let's look at a 2017 Ford F-150. Very nice truck. My brother has one of these. Instead of paying 4.34, you'd be at 16.14% interest on the car, which raises your payment, like we said, by about 31%, which means that on this $32,000 car, you could actually pay an extra $15,857 on this vehicle over the course of the 7 years, which would actually let you get a $51,000 truck if your credit was better for the same payment, which would get you into a newer truck, maybe an F-250, V8 versus V6 Platinum package, or at $51,000, it could get you into a Mercedes, let's face it. But basically between these two things, between the 20 years in the home, the 7 years on the car, your financially critical credit score is costing you over $129,000. Let me read that again. You will overpay by over $129,000. That's assuming that car will last you a full 20 years, which we both know it won't. So the savings would actually be higher because you would have to get a second car loan at the worst credit. Doesn't make sense. This is a lot of money. Let's put it back into your pocket. There's very simple ways that you can actually increase your credit score to get up into the excellent range and save this $129,000. Just click on the link below, insert your information, and we will send you information about how you can get your credit score up and put this $129,000 back into your pocket. Thank you very much for your time, and I hope you have a great day.